Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets on this exciting day in 2026. We've got a lot to unpack, from historic milestones to some serious turbulence in tech and plenty of opportunities for long-term investors like us to consider. So, let's dive right into the heart of today's market story and see where we can position ourselves for the future. First up, let's talk about the major indexes, because we've got a big headline here. The Dow Jones Industrial Average smashed through the 50,000 mark for the first time ever last Friday, and today it's holding steady with a slight uptick. Meanwhile, the Nasdaq and S&P 500 also showed some strength, with the Nasdaq climbing nearly 1% and the S&P 500 edging up as well. This tells us the broader market is still riding a bullish wave, even if there are pockets of concern. For long-term investors, this kind of resilience in the face of volatility is a reminder to stay focused on the big picture. Markets can climb walls of worry, and these milestones often signal sustained confidence. Now let's check out the winners of the day among large-cap stocks. Oracle led the pack with a standout performance, soaring nearly 10%, likely fueled by renewed optimism around its cloud and AI infrastructure plays. Palantir also caught attention with a solid gain of over 5%, continuing to benefit from strong demand in data analytics. And check out AppLovin, rocketing up more than 13%, a rebound from recent pressure as analysts call competitive fears overblown. These moves highlight where growth is happening right now, and for us long-term folks, they're a nudge to keep an eye on tech innovators that are carving out strong niches. On the flip side, we've got some notable decliners dragging down parts of the market. Merck slipped a few percent despite its strong long-term portfolio, possibly due to short-term profit-taking after a big run. Booking Holdings took a hit of nearly 5%, reflecting some concerns in travel demand, and Workday saw a steep drop of over 5% after a surprising CEO change raised eyebrows about timing. These dips can be painful in the short term, but for us long-term investors, they often spell opportunity, especially with fundamentally sound companies like these. Is this a buying moment? Something to think about. Looking at the market movers shaking things up by trading volume, Nvidia and Amazon are front and center, as usual. Nvidia edged up a couple of percent, still a key player in the AI space, while Amazon saw a slight dip amid chatter about its massive capex plans for 2026. Tesla also made the list with a modest gain, buoyed by updates on its commercial programs. These heavyweights often set the tone for the market, and their moves remind us to stay diversified. While they're critical to growth portfolios, balancing exposure is key for the long haul. Diving deeper into the most active stocks by volume, we see names like Intel and Snap also drawing huge interest. Intel's holding steady despite broader tech pressure, while Snap took a small hit, possibly tied to ongoing competition in social media. High volume often signals where sentiment is shifting fast, and for us, it's a heads-up to watch these names for potential entry points if the fundamentals align with our long-term goals. Zooming out to the past week, some large-cap stocks have posted incredible gains. Lumentum Holdings surged over 35%, showing massive strength in tech hardware, while Hershey's climbed more than 21%, proving consumer staples can still pack a punch. Teradyne also impressed with a 20% jump. These weekly movers show where momentum is building, and for long-term investors, they're a reminder to look beyond daily noise. Sometimes a strong week can hint at a durable trend. But not everything was rosy over the past week. AppLovin, despite today's bounce, dropped over 27% in the last 7 days, hit by valuation concerns. Stellantis plummeted 26%, reflecting broader auto sector woes, and Reddit sank 25% as growth worries linger. These sharp declines can spook short-term traders, but for us, they're a chance to dig into whether these are temporary setbacks or deeper issues. Patience often pays off with oversold names. Shifting gears to earnings, we've got a packed week ahead with some heavy hitters reporting. Companies like Amazon, Microsoft, Meta Platforms, and Tesla are on deck, and the street's watching closely for updates on AI spending and growth guidance. Last week, we saw mixed reactions. Workday's CEO transition news didn't sit well despite decent numbers, while Hims and Hers took a beating after scrapping a weight loss drug plan. For long-term investors, earnings season is less about the immediate pop or drop and more about the strategic insights. How are these companies positioning for the next 5 years? That's the goldmine. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into what these companies are saying about their future plans. Let's touch on some broader economic news shaping the market narrative. There's a lot of buzz around AI spending, with hyperscalers like Amazon planning aggressive CapEx increases for 2026. Think hundreds of billions. But not everyone's thrilled. Some worry this euphoria might hit a speed bump as software valuations face pressure from disruptive AI models. Meanwhile, the Dow's historic climb is getting attention, though warnings of potential bear market triggers in 2026 are floating around. Globally, Japan's election outcome is boosting risk appetite, with their markets hitting new highs. For us long-term players, this mix of optimism and caution means staying nimble. Global events can create ripples, but they also open doors for strategic buys. Lastly, a quick look at sector performance over the past week. Industrials led the charge with over 5% gains, showing strength in manufacturing and infrastructure. Basic materials and energy also performed well, up around 3 to 4%, benefiting from commodity tailwinds. These sector moves can guide our allocation decisions. Industrials, for instance, might be a steady bet for long-term growth as economies rebuild. On the weaker end, financial services and utilities barely moved, with gains under 1%, reflecting less excitement in these defensive spaces. Technology, surprisingly, took a hit with a significant decline, dragged by AI-related sell-offs. While short-term pain in tech can sting, it often sets up compelling valuations for us long-term thinkers, something to monitor closely. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope you found some actionable insights to chew on. Make sure to stay engaged with us for more daily summaries and in-depth SWOT analyses to help refine your long-term investment strategy. Until tomorrow, keep your eyes on the market and your mind on the future. See you soon.